plans, we reviewed the mining costs that we've used in Obuasi to forecast those costs. So we think we've done the right thing. It reflects a one-off approach, but we do look at our provisions on an annual basis and make sure they're adequate. We certainly hope that this isn't a continuing thing. We're doing lots of work to ensure it's not. So from our point of view, it's a one-off, but it is a long-term impact on an annual basis, a very small amount, and therefore we certainly believe it's appropriate.
When you look at South Africa, let's talk about power specifically. We've got concerns around power shortages in South Africa. Talk to us about your predictions in terms of that, the type of costs that you're facing with regards to power, and especially the need to perhaps turn to generators and that power source.
The total industry is under lots of inflation pressures. For example, the 30% increase in power costs, labour costs somewhere between 8 and 10% a year. Input costs generally are up 10 to 15%, so lots of pressure. And if you took it on average across the industry, it's probably in the range 15 to 25%. Now, the good news for AngloGold Ashanti shareholders is we've held the last 2 years at less than 12.5% each year. So we're doing better than our competitors, but still under lots of pressure. Obviously, with the production discontinuities we've seen in the year, that's also putting us under pressure, but we're holding our own pretty well.
When we talk about production targets going into the new year, you're looking at 4.3 million to 4.4 million ounces. What are these assumptions that you're basing this target on?
Well, certainly in the South African context is that we don't have any significant power disruptions, and as well as that we actually get a clearer run with our operations and we don't have other major stoppages, because if that starts to impact on the operation, that'll obviously impact our targets. But they're the two key assumptions at this stage.
Are you concerned that specifically when it comes to safety stoppages, the local government here in South Africa has become too strict?
Well, I do sympathise. Look, we've had a bad quarter from a safety point of view, so it's been tough. The stoppages associated with those incidents and other high-risk incidents are appropriate. No argument. The DMR, I think, has done a good job on a longer-term basis, actually working with the industry, reducing accidents. So, you know, and in fact South Africa in the last 10 years has been the most successful country in reducing accidents, but we've still got a long way to go. What we would be concerned with is when operations stand for a long period of time over issues that don't pertain to major risks that we would see, that you stand deep underground operations, you actually create additional safety hazards. So getting that balance right is really about a partnership, a dialogue between ourselves and the DMR.
Gold price, you're obviously bullish. There's been forecasts that you've been citing above $2,000 this year. What type of assumptions are you basing your production target so far on in terms of the price going forward, and what are going to be the key drivers in your view? On
an average gold price, if you look at industry cost structures, the sort of 10 to 15% inflation pressures, gold has increased on average the last 5 years around 25%. I think it's unlikely that we'll get that sort of kick this year, although I'll caveat that with the view that one can always rely on some politicians to do something strange. So maybe it's not out of the ordinary, but we'd expect under normal circumstances for the gold price to range somewhere between 17 to 1800, maybe 1850, but there is the potential for it to pop through 2000 depending on what happens with Europe, what happens with the US's balance sheet, or some other issue that none of us even know of.
Further down the line, you're targeting production of 5.5 million ounces. That's by 2014. That's a 25% increase from where we're looking at production in 2012. Which regions is this growth going to predominantly come from?
Look, based on current circumstances in South Africa, I don't see growth in South Africa from ourselves, but certainly the challenge will be to maintain our operations even at the current levels. But I think we can do that. We work with the DMR. We've announced new projects, extensions, $800 million US over the next few years. So we're investing in our business, and we'll get those issues sorted. We will see a doubling of production out of Australia through the new Tropicana project. We'll see 15 and 20% rises through the Americas with the new Corridor de Situ project, two new projects in Argentina. And then if you go into continental Africa, we're investing with two new projects, one of which is a partnership with Randgold in the DRC, and we've got new projects in Mali and extensions to projects in Guinea and Namibia. So we've got a very broad portfolio of opportunities that we're pushing.
When we talk about the capex needed to get to this target, can you give us a type of a ballpoint figure, and how much of this has been accounted for?
Okay, sustaining capital we're forecasting next year around the 1.1, 1.2 billion, and we're looking at new project developments of around 1.1 billion next year. We haven't put a forecast for the following year, but on new projects it'll probably be the same, maybe a little bit less. So around $2 to $2.3 billion worth of new investment on new projects to get to the $5.5 billion. But what that does is improves our production per share by 25% and our cash flow per share, all things being equal in terms of gold price, by another 25%. So certainly real value creating type investments.